Joining me now from the CBOE, trader Scott Bauer, and here with me on set, Main Street Asset Management CIO Aaron Gibbs. Scott, no wonder the VIX spiked 23% yesterday. It breached the 18 level, which was a 3-month high, right? And then it's coming down just a bit today. But when you look at the fact that the NASDAQ had cut, but was cut by 3%, 3.5%, the first time in 400 days, I think, 400 trading sessions. What does that tell you?
Well, it's very interesting because if you look at the term structure of the VIX, Liz, it tells a lot. When we see that big VIX number up on the screen, on Fox Business here or anywhere, you see what's called the spot or the cash VIX number, meaning where is it trading right here and now? But the VIX is a futures product. So there are different term structures going out in time, and typically, like with most futures products, we see higher pricing going further out. Yesterday, for the first time in a while, that cash or spot VIX, as soon as it eclipsed 18, actually moved higher than some of the futures prices. That went into what's known as a state of backwardation. What that tells us is that the risk or the fear in the index or the fear in the markets, if you will, is kind of here and now. It's not worrying about 2 months from now or even the election. The fear was here and now. And when it does go into an inversion or a backwardation like it did yesterday, it doesn't last very long. And we saw that reset almost immediately today when the market rallied.
Yeah, it rallied past tense. I mean, we still have the Dow in the green.
Tense.
And I mean, the S&P now negative by just 1 point. Aaron, to what do you attribute the fumbling at what? We're at the 10-yard line right now. I guess the 1 yard would be at 3:55 p.m. Eastern.
I agree. I think what happened is we got that good report this morning.
GDP.
Right, to GDP. That was all positive. Okay, so the economy is doing better than we previously expected. There was a reaction, but I think, that fear, and we still have a lot of fear in the market. What's going to happen with the PCE tomorrow? What are the inflations going to look like? What is the Fed going to do at their next meeting?
And let's be clear, the PCE is the Fed's favorite inflation gauge. And for June, we are expecting to see, well, we can put it up on the screen, but this is the number you want to see come down, correct?
Right, exactly.
Month over month, up 0.1%. That's going up from the prior flat. And year over year, 2.5%. That's the expectation. Previous month, 2.6%.
Right. So the closer we can get to that 2% goal, that's what we want to see. And so I think there's just that hesitancy set off of, okay, well, there was some good news this morning, but you know what? There's still a lot of unknowns. There's a lot of uncertainty. And we could see more days where the market goes down. Even if tomorrow is a little disappointing, we still have a couple more months before we expect the Fed to really make a change and start cutting rates. There's very little expectation they'll actually do anything at this meeting. But I think there's going to be continued fear right up until that September meeting.
The fear was really prevalent, Scott, in the SOX index, the semiconductor names, which have done so beautifully over the past year and a half. I mean, yesterday we saw the SOX selling off pretty dramatically. And I'm looking today, it had been up higher, but right now it has turned negative again, down 1%. What's happening here? Is this the anticipation of that inflation number tomorrow? By the way, everybody has to watch at 3 p.m. Eastern because it'll be the final hour that could be rocking in the wake of that.
It was a little bit of herd mentality yesterday also, Liz, when all of a sudden that panic started setting in and that VIX started rising here. Well, people that were still holding on to some of their profits in the semis or whether it was in one of the indices or whatever it may have been, they said, all right, you know what, maybe it's time to just get out. And we did see a little bit of capitulation.
I mean, is that what's happening now?
So,
maybe it's time to get out with 55 minutes left to trade?
No, I don't really think so, to be quite honest with you. I'm not seeing that. If we look at what the VIX is doing, it has settled in a little bit. A lot of that anxiety, if you will, is gone from yesterday. But let me throw out something else that I believe really catapulted the market today. All of a sudden, Fed fund futures that are being baked into the market, the probability of not one, not two, but 3 cuts this year spiked earlier today. That has come in a little bit, but I think the market reacted to that very positively and then maybe looked at it and said, well, maybe that's not such a great thing.
Well, Aaron, with all of this swirling around, and it's a lot, where are you putting your money and your clients' money?
So one of the things I like actually is small and mid caps. I think it can get a boost. Even if we get one cut, I think it's still going to be beneficial. Another thing I think is looking at some of the trades. The markets are definitely indicating more of a Trump win. So the industries that one would assume his policies would be benefiting are doing better. So energy, big pharma, small and mid caps. Those tariffs that he promises to increase should help those smaller domestic-based companies.
Yeah, because they are expected to be purchasing a lot from overseas, although maybe components. Would it surprise you as we finish up to know that during the Trump administration, it was clean energy that did incredibly well, popping dramatically, but basic energy fell under Trump by 40%, under Biden up 200%. You flip it over to the clean, you would have expected it would do better for Biden. Under Trump, clean energy jumped 275%. Under Biden, it has fallen 50%.
It's all about anticipation and not what actually happens. I think this is something that you could trade at least until January, but it's really about just anticipation and expectations, not what actually happens.
That's true. Yeah, the market is exactly. It runs ahead.
It likes to lead. It likes to lead.
Aaron Scott.